Good morning. I hope you had a wonderful weekend. I know I did. Let's just dig into it. Last Thursday, the Federal Reserve Board left the prime rate unchanged. So we saw an initial knee-jerk reaction in mortgage bonds to rally. That really put us back to recover the losses from earlier in the week. We've seen a slight fallback today, Monday. Stock market's up 100 points. Mortgage bonds are down about 20 points. So we're pretty much unchanged through all this turbulence, up and down, but we're about where we started the previous week. And as I mentioned, keep in mind that we were looking for a prime rate increase from the Federal Reserve Board. I really believe that would have helped long-term and mortgage rates to go down. When the stock market sells off and treasury bonds sell off, we usually benefit from that. So it's counterintuitive, but a prime rate increase will likely cause mortgage bonds to perform well, which will cause interest rates to go down. 9 out of the last times they increased the prime rate, that's what happened. So we're actually rooting for that prime rate increase, in my opinion. But as I mentioned, they left the interest rate unchanged, so we'll see what happens. 13 of the 17 members believe they should increase the prime rate by year's end, but they're running out of time. There's only 2 meetings left, so we'll see what happens. Existing home sale report is in today, and it did fall back from the previous month's number, or down 4.8%. But remember, that number was the best number in 10 years. And inventory is a challenge. So I think it's still a very strong number. 228,700 is the median home price in the United States. That's 4.7% appreciation from the previous year. So that's sustainable growth when it comes to real estate, in my opinion. I think that's sustainable. I think here locally in Chicago, we're seeing a little higher. So it's just a very strong real estate market over the entire country. Inventory levels are low. They're at 47 days on the market currently. So real estate, the average time on the market is 47 days right now. That's a 5.2 month supply. So only 1.75% of houses are for sale right now. That's the lowest level since 1995. So when you couple a strong appreciation rate with the low inventories, I think housing nationwide is very strong. The media never portrays this, however. We see them bashing this number and going out and saying how negative real estate is and how it's not performing well. And you just have to be the professional, let your clients know this isn't true, and present these numbers. They're always going to portray it in a negative light. So this is very sustainable, strong growth when it comes to real estate. What I thought was very positive out of the report is first-time home buyers increased 2%. They now make up 34% of the buyers out there. So when you take that into consideration, you must be prospecting and finding first-time home buyers. I would love to partner with you on a first-time home buyer seminar. I do these all the time. I'm a professional at them. I speak at them regularly, and I'd be happy to partner with you, help your business grow as well as mine, and capture over 1/3 of the buyers out there. So if you'd like to contact me to discuss, you can always reach me at 773-654-2031.